Welcome traders, hope everyone's well. You probably clicked in this video thinking that you're going to be shown a strategy on how to be profitable and how I'm going to show you special rectangles and lines about where to buy and sell. If that's why you clicked in this video, then sadly this one is not for you. This is going to show you exactly how the market moves, and it's going to give you an insight into the players that you're up against, and it's going to tell you how you need to actually start looking at the markets. Okay, so what you have right in front of you right now is the depth of market. This, very simply put, is where all the buy and sell orders are coming into the market, and this is in essence what is driving any market. Okay, now what you're not realizing, and when you're only looking at a candlestick chart or in TradingView on any of these other platforms, is these firms, and we're going to go into depth of who these firms are, who are they, okay, because largest firms and market making firms, they are simply there to make a market. That is the job, that is the role, okay. They are working several books, not just the book that you're trading. So if you're trading ES or trading NQ, they are working metals, treasuries, they're working all of the different equity markets, and they're hedging across the underlying products as well as hedging across on options. They're working the full market, and they've got algorithms that is essentially showing them inefficiencies in the market, okay, and you've got no idea at any time where they're net long, where they're net short, and where they ultimately need to take positions. But you better believe that they're working the bid and offer, which means it's not like you and I, when we take a long position, we're long, we can't then sell on the same account, okay. These firms are collectively working the bid and offer at the same time, both for their own personal accounts and their client accounts, okay. So this is mainly going to be aimed at who these firms are, okay. You need to be aware of what they're doing, and you need to also understand the games that they get up to. Now, we're not here to start saying that the market's manipulated, because it's not, okay. These firms have their business to conduct the same way as we do. They're just not playing in the same field as what we are. They've got billions at their disposal. They've got far more better technology. They're closer to the exchanges. They've got better latency, okay. And the quicker you understand this, and you start to understand the games that they're going to play, so that you can adapt and be aware of what kind of context you're in for the day, the higher likelihood you're going to succeed, okay. So you need to understand the game theory, and if you are a poker player or you've been involved in poker in the past, a lot of that is just simply down to an optimal strategy and theory that comes around, because whatever which way you look at it, there is theory and human emotion that goes into trading, and market making firms are fighting against each other and against retail in order to work the bid and offer, okay. So before we discuss, and we'll bring up a chart in a bit, okay, and look at it, these are the firms that you're up against, okay. I'm just going to double check that you can see this, but this is one of the largest market making firms on the planet, Citadel, okay. These guys in trades are executing 476 billion across the market in a 24-hour period, okay. One of the largest market making firms. You then have Optiver, who's another global market maker, okay. Their job is to make markets. They've got the best quants in the world, they've got specific routing to the exchanges, You know, we're just never going to be able to compete with that. Okay. And then we have DRW. Okay, another huge market making firm. Okay. And then of course everyone has heard of Goldman Sachs. Another absolute massive entity. Okay. These are the types of guys that you're competing with who are making markets and working the bid and offer on multiple products at the same time with multiple reasons for executing those trades. Okay? Because I wanted to take this away for a minute, away from the charts, so that you can actually understand who's the competition and what games are they going to play. Okay? Now, these guys need to fight against each other. Okay? And they're not there specifically to take retail money. That's not why they exist. Before we start saying the market's manipulated, that's not why they're there. They're there to make profit for their shareholders and for their capital under management. Okay, and they will also be there to execute block trades for their clients to get fills. That's going to be their job. Okay, so take note of these firms, because they are the ones that you're up against day to day, and they're the ones that are going to be playing games in the book to try and get the best price and ultimately to shake people out of positions. Okay, now if we jump back to this chart, I'm going to open up the most standard chart. Okay, here for a second. So we're going to open an intraday chart of ES to put this up, and you're going to see the most recent session. Okay, as to how this works. Now, what we're not going to do here is we're not going to start going into strategies. We're going to show you the general concept of how this works. I'm going to put this to the 5-minute chart, and you're then going to see what they do. Okay, now this was the end of the close for Friday the 17th of May. Okay, the close that happened. Now, very, very standard. This was a really balanced day. I traded this session, okay? But if we can draw lines at the high and low here, this is very simply what they do, okay? This was the low of the session. This was a couple of hours before close. The market has been consolidating around this area the whole day. And then ultimately they drive price down, okay, where all these people would be long. There's bound to be tons of stop orders, because what has everyone in the Gran learned, when they take a long position, you put it below the swing point of the day is where the point is invalidated. Now, these guys ultimately know this. You know, they've got extremely sophisticated systems that they can know this. I mean, we even know this. Never mind algorithms that are built by the best quants in the world. Okay, they drive price down, and in this, when they're doing this, okay, there is a cascade that goes off. They, when driving price down, the people that are buying need to get out of their position, so they then sell, so that causes a domino effect for price to go down. Okay, and when they have to sell their positions, this then allows these firms that we discussed to then start working the bid, because in order for them to get filled in the bid, there has to be liquidity on the offer for them to do that. And that's back to the grand old theory of, for every buyer there's a seller. Okay, and this happens all day, every day, at key swing points, in micro ranges, at high and lows of the day, in pre-market high and lows of the day. This is what they're doing. They're working the bid and offer continuously. And what they always will seem to do is the market will go down, it will cascade and trigger stops, and you'll notice this on the depth of market, where it will sweep through prices and stop orders are triggered. Okay, then depending on the amount of stops that get triggered and how much they want to put price down, they will then start aggressively hitting into the bid. Okay, and then they will notice some absorption. There'll be volume down here, but will then snap back, and then before you know it, we're then back in the range, and then we're then doing the exact same back up at the highs here. Okay, they go up, sweep this by a literal tick, and then back into the range. Okay, you can go into any chart of any day, and this is continuously what they do. You need to understand that this is what they're doing, and this is the games that they get up to. Okay, and the only way that you're going to know that is by understanding the tactics they're doing, that this is a game, and these guys have more money than you, they've got better technology, they've got more resources. Okay, and unless you understand the games that they're playing, and you change your mindset for trading and the perspective, okay, you're never going to be able to do this. You'll never be able to hit these home run trades. You know, you need to understand the context in the day, what volume has been traded in the DOM. You know, you need to take all of that into perspective for that specific day. Okay? Now, how you identify this is when they sweep this level. You know, I will link some videos in the description for actually order flow trading examples, where we cover this day in and day out on our live stream. Okay, but the key factors you need to look at is you will see they will dump price down, you will see the stop order has been triggered because it blips through price. Okay, and then when the market gets down to these levels, you will see someone starting to absorb on the bid. Someone will literally put their orders there and it will snap back. Okay, it's probably more than likely the same firm that drive price down, to be honest with you, because now all they've got all their positions filled that they require, and then they start working the bid. They literally flip their position and start working the bid. That's what they do. Okay, and then as soon as the volume does that, you've then got the other cascade. You've then got all of the people that then thought, oh shit, this is going to absolutely dump. They then steam in short. It gives the market making firms the liquidity then to get filled on the bid even more because they start working the bid, and then they start aggressively lifting into the offer and buying, and before you know it, you then have the cascade because all these people that steamed in short, they now need to cover, and they have to buy to get out of their sell positions, and next thing you know, you're back up at the high. And when you're in these tight consolidation ranges for the day, when you have that for Friday the 17th of May, where it's just simply in balance, you're just fading the extremes, and they're doing this all day every day. Okay, so you need to be paying attention to this, and I think this is more important than me showing you strategies and showing you, you know, random rectangles in a chart. Okay, you need to understand the concepts that are behind this and what these firms are doing. You know, because if you've never thought about it, you've never seen it in action, and you've never watched any interviews or even considered that this is what you're up against, you're not going to stand a chance. Okay, so this was a quick video for you to just simply try and change your perspective and change your mindset for how you're actually looking at charts and looking at trading. Okay, the market is not random. There is a random distribution between wins and losses for us as retail traders, because we cannot control when we press the buy button which firms are going to come in next. You know, on this one price you can see there was 581 contracts executed in offer. We've traded like 2 or 3 contracts ourselves. We've got absolutely no bearing in the market whatsoever. So we've got a random distribution between wins and losses. We cannot control that. However, the market is not random. Okay, these companies and firms, literally, you've seen this, they're trading billions and billions a day, and they literally have the volume to move the market. You know, we don't know what their hedging exposure is in a day. They may need to just spend a little bit more money to aggressively hit into the bid to drive price here. They can then close their positions on the underlying or in some of the ETFs and stocks or equities that are actually trading, and then they then get to buy in, okay, and lift the offer back into the range for the day. Okay, so I hope this video provides you value. I hope you pay attention, because this is going to change how you perceive the markets. This one specific way, if you start looking at the markets in this way, it will basically change your trading journey. Okay. Now, if you've got any comments or any questions, please make sure and leave a comment below. Do all the YouTube shit for me. Make sure and hit the like button, hit the subscribe button, hit the bell, share it to a friend, do all of that good stuff, okay? Because the more this gets out to people, the higher likelihood they have got of succeeding, okay? Because there's no chance either way if you start drawing random lines in a chart and not taking into context the participants that you're playing against and what order flow is coming into the market, okay? So we'll catch you guys in the next video. You guys have a great day. Okay, peace.